Hello everyone, welcome to Module 6 of Sanctions. In the previous modules, we learned what sanctions are, how screening works, and who is responsible for compliance. Now, in this module, we will understand the other side of the picture. This module focuses on how sanctioned individual companies and countries try to escape or bypass sanction controls. Sanctions evasion is one of the biggest risks faced by banks today. Even the strongest sanctions system can fail if evasion techniques are not properly understood. That is why this module is extremely important for anyone working in AML, KYC, or sanction compliance. Now let's understand sanction evasion. Sanctions evasion means deliberate actions taken by sanctioned person or entities to hide their identity, involvement, or ownership so that they can continue accessing the financial system. In simple words, sanction evasion is about appearing clean while actually being restricted. A sanctioned person knows very well that banks are screening names, countries, and transactions. So instead of coming directly, they try to come indirectly. They use methods that make the transaction look normal on the surface but hide the real beneficiary behind layers. It is important to understand that sanctions evasion is not accidental. It is usually planned, intentional, and systematic. For example, if a person knows that his name is on the sanctions list, he will not try to open a bank account in his own name. Instead, he will look for alternative routes. These routes form what we call evasion techniques. From a compliance perspective, this means one thing very clearly, that is, checking only names is never enough. Now, use of relatives, friends, and close associates. It is one of the oldest and most common sanction evasion techniques is the use of relative or close associates. A sanctioned person may use a spouse, a sibling, a child, or a trusted friend to carry out financial activities on their behalf. In such cases, the account holder is legally clean, but the control and benefit lie with the sanctioned individual. For example, imagine a sanctioned businessman who owns multiple assets. Once he is sanctioned, he can no longer operate bank accounts. To continue business, he may ask his wife to open an account in her name. Officially, the wife is the customer, but in reality, the sanctioned person is controlling the money. This technique is dangerous because names will not match sanction list. Documents may appear genius. Transactions may look normal. That is why banks are required to understand beneficial ownership and control and not just legal ownership. When compliance team ignore relationship analysis, sanction evasion becomes easy. Now, shell companies and front businesses. Another very common evasion technique is the use of shell companies and front businesses. A shell company is a company that exists only on paper. It has no real business activity and it is created only to move or hold money. A front money, on the other hand, may appear to have real operations but is actually controlled by a sanctioned person. Sanctioned individuals often create companies in different countries, offshore jurisdiction, weak regulatory environment. They appoint nominee director or dummy shareholders. So their own name never appears. For example, a sanctioned arms dealer may set up a trading company that officially deals in machinery parts. Payments look like normal trade payments, but the real purpose is to fund illegal activities. From a bank's perspective, this is why corporate sanction screening is much more complex than individual screening. It requires analysis of ownership structure, control rights, and business logic. Now, complex payment structures and layering. Sanctions evasion often involves complex payment routing. Instead of sending money directly from a sanctioned country to another country, transactions are routed through multiple banks, multiple countries, and multiple intermediaries. This technique is called layering and it is borrowed from money laundering method. For example, instead of sending money directly from country A, that is sanctioned country, to country C, the payment may go. So, country A can send through country B and through country D and through country C. Each step makes detection harder. Sometimes even payment messages are manipulated. Description may be vague, incomplete, or misleading. So, names of sanctioned entities may be removed or shortened. This is why transaction screening systems analyze message fields, intermediary banks, and payment routes. A simple looking transaction may hide a sanction nexus deep inside. Now, next is trade based sanction evasion. Trade is one of the most abused channels for sanction evasion. Sanctions entities may misuse import export transactions, shipping documents, over invoicing, or under invoicing. Goods may be shipped through third countries to hide their true origin or destination. For example, goods originating from a sanctioned country may be relabeled, repackaged, and shipped through another country. So, on paper, everything looks compliant, but in reality, sanctions are violated. Banks involved in trade finance face high risk because documents can be manipulated. That is why trade sanction compliance requires deep understanding of goods, routes, and counterparties. Now, why sanction evasion is hard to detect? Sanction evasion is difficult to detect because it uses legal looking structures, it exploits weak control, it relies on human trust. Criminals understand banking rules very well. Sometimes they even hire compliance experts to design evasion strategies. That is why regulators expect a bank not just to follow rules mechanically, but to apply judgment, logic, and risk based thinking. If something looks unusual, even if it is not clearly prohibited, it must be questioned. So, the final summary is in this module, we learned that sanction evasion is intentional and sophisticated. Sanctioned persons rarely operate openly. They hide behind people, companies, transactions, and trade structure. For banks, this means sanction compliance is not about ticking boxes, it is about understanding behavior, control, and intent. A good sanction professional does not ask only does the name match, they also ask who really benefits from this transaction. With this, we end our module 6. Thank you.